I always say trading is very, very simple. And if you are my student on this call, then probably you should know what I'm doing right now. So the first thing you have to do is you have to state your confluences and you have to make sure when analyzing the market, you know what you're doing and you follow that same pattern to work, same way you're doing. So if you look at this market keenly, this is price action, naked Forex, price action. What we see here is that the market is on a downtrend, AUD USD, quick technical analysis, less than 10 minutes. So we spot AU on a downtrend. It's a complete weekly recap. Guys, pay keen attention, stay focused. I know most of you guys don't have lights where you are, but now it's a downtrend, right? And what you want to do is you want to do top-down analysis. You don't want to go on the weekly time frame without looking at what is happening on the monthly time frame. On the monthly time frame is very keen. We had first rejection, second rejection, and now the market's still taking liquidity from this candle, and we're about to maybe sell. But if the weekly time frame isn't corresponding with the monthly time frame, then probably we might not be ready for a sell. So me looking here keenly, what I can spot at this point is equal monthly highs, equal monthly lows. So where do you think the market is most likely to go? Down, because we're on a downtrend. Make trading very simple. Always look at where you want to take the market go to and make it make sense. So I look on the weekly time frame. On the weekly time frame, it's very evident that on the weekly time frame, we had a value break of structure here on the weekly. As you can see at this point, we have a value break of structure on the weekly, and then now this is the push to the downside, which the market is taking all trailing stops from left, right? And if you look here keenly, we have a valid lower low and a valid lower high on the weekly time frame. On the weekly time frame, we have a valid lower low, lower high. So that structure being broken here on the left. I'm not discarding the fact that the market has all the right to get to this point, but I'm following candlestick pattern. I'm following the trend of the market. They always say trade with a trend. So now, looking at this candlestick pattern on the weekly time frame, the market has been trying to sell for a very long time. Tweezer top, a bearish candlestick pattern. The market sold and bought to the upside. What again? Shooting star and an evening star and a bearish engulfing, and the market still bought to the upside, taking out liquidity from this whole candle. So the reason for this market buying to the upside was to take out liquidity from this whole bearish candle, which was dominated by sellers. So we had early sellers at that position. So one thing we should stay very keen at this point is that if this market was supposed to buy, we would have broken a key zone around here, which is a very significant zone. You can see the market has been approaching that zone, just retracing, right? Approaching, and that's just been retracing. But now it seems like we have a green light of this candlestick pattern, which is a bearish engulfing after taking out what? After taking out all these previous weekly highs, and we have these weekly lows, and these weekly lows. So I, for one, I'll be looking for a sell, and this is how I flip my accounts. $50, $250, $200, $1,000. This is how I flip my account. I spot one high quality setup, and I decide to wait for that setup for the whole week. So if you look at this market currently right now, what we should be anticipating is we should draw our key zones and look at potential reversal areas. I'm not discarding the fact that the market has the right to play like this, take out these lows, and buying again to the upside. Buying again to the upside. Dylan, mute your mic and off your video. So I'm not discarding the fact that the market has the possibility of doing this, pushing to the upside, because it can still give us a change of momentum on the weekly time frame 1, 2, 3 to the upside. I'm not discarding the fact, but I'm telling you that if you're looking for a buy at this point, then you're on the wrong side. You should be looking for a long sell. Get the point? You should be looking for a long sell because we already have a bearish engulfing. And because the market, we find this setup on when to trade, that is during the end of the month. What's the date of today? 22nd. Tomorrow is 23rd. So we have at least 5 more days of the week for us to make good trading decisions to push this market to the downside. Already corresponding from the higher time frame, the monthly tells us that we have so many rejections here. The weekly is telling us that what? The weekly is telling us that it's giving us consistent bearish candlestick patterns, and it has been taking out liquidity. It has taken out liquidity like 3 times. Induced trap sweep, induced trap sweep. Although these highs have not been taken, they just induced buyers with this tweezer bottom, and then they trap them and they're coming to take them out. So if I should draw my key zones, I'll be looking at key zones where the market can potentially retest at. So let's go on the monthly time frame. On the monthly time frame, you all know how I draw my key zones. So on the monthly time frame, I have a key zone around here. Good, right? And I have another key zone around here on the monthly. I think those are the only 2 key zones I can highlight at the moment on the monthly time frame. So if that's the case, I'll need to go on the weekly time frame and look at a good key zone on the weekly, which the market can help me with. At the current position, I think I might have a weekly key zone around here, and someone also around this point. Yep. I'll take these 2 key zones, this and this. I won't take this one at the top because this one actually aligns with, the monthly key zone. You get the point. I won't take that one. You can see how the market actually been playing at this key zone, 1, 2, 3, rejecting from that monthly key zone. So now we boil down on the lower time frame to look at structure on the daily, and then we align it with structure on the 4-hour. On the daily time frame, since this is a weekly higher high, it means we need to see valid daily higher high, higher low. I mean, since this is a weekly lower high, we need to see a valid weekly. Since this is a weekly lower high, we need to see a valid daily higher high, higher low, higher high, higher low. So in all honesty, if this market is supposed to push to the upside, since we have a change of momentum on the 4-hour time frame around here and a break of structure on the 4-hour time frame, what needs to be done is that we do not need to see a break of structure on the 4-hour time frame back on the downside if we had a break of structure on the upside. If we have a break of structure on the upside, we don't need to see a break of structure on the downside again. Else, I'll be saying this is a change of momentum on the daily, and the market wants to play like this and keep going low. So if we have a break of structure to expand this bullish higher high on the daily, it means the market just needs to give us 4-hour higher high, higher low, higher high, higher low, higher higher on the 4-hour time frame. So if I switch on the 4-hour time frame, we should be looking only on higher highs and higher lows. So on the 4-hour time frame, what I noticed here is that we had a lower low, we had a lower high, and then we had a lower low, and we have a higher high. So on the 4-hour time frame, we work structure on the downside. So this push to the downside should be attributed like that is a daily, my bad, that is a 4-hour lower low, and all these pushes should be attributed that it's a 1-hour lower low, lower high, lower low, lower high on the 1-hour time frame. So if that is the case, so it means that this is a 4-hour higher high, higher low, right? And now we have another 4-hour higher high. That's good. So in all honesty, if this is a 4-hour higher high, higher low, higher high, so this structure is not supposed to be broken. You see how I'm aligning multiple confluences for me to have a good elite entry, it to give me much confidence to take a trade. So now we have a break of structure here on the 4-hour time frame, which means that it violates all the rules stating that the market should be buying to the upside. So what was supposed to happen here was a retracement, break of structure on the 1-hour time frame, and the market pushes to the upside. But that's not what's happening in all honesty. What's happening right now is that we're taking this low. So what we should be looking at this point is that the market is trying to change its momentum instead for a buy, now for a sell. So now going back to the daily time frame, you see how I'm aligning every single thing. On the daily time frame, what we should be looking for is how the market might either dump to the downside, play back at this point before it keeps going low. So if you are the type of trader who is always anxious to take a trade, anxious to be part of a move, then you might miss this setup for a sell. But if you're a trader who is patient, then you should be waiting for how the market buys back, plays around here before going low. So I'll be waiting for the market where? I'll be waiting for this market back at this key zone. I'll be hoping, praying that the market gives me a solid retracement back around this point before it dumps again to the downside. This is where I'll be taking my trade, putting my stop loss for a short position, putting my stop loss around here. And in all honesty, putting my take profits at this point, because I anticipate that this low should be taken. So this is a 1:3 risk to reward ratio. I'm taking this trade. It's a good, reasonable risk to reward ratio trade. But once the market comes here, I'll be hoping to see the power of 3, which gives me a sniper entry. Take that trade, good for the week, good for the month, which I might still take this trade on the lower time frame with a tiny stop loss. Don't discard that fact that I might take this trade with a tiny stop loss, right? With a tiny stop loss. These two indicators you see on my charts. They are called the 200 EMA and the 50 EMA. I've been using these indicators for over 3 years. They actually show me elite points of break and retest. So what I'll be hoping at this point is if the market decides to give me something like this back to this position, right? I'll be hoping to see maybe a break of structure here on the 1 hour time frame and a push to the downside and a valid retracement on the 4 hour time frame and a push to the downside. So once I say break of structure on the 1 hour time frame, my stop loss will be very tiny at that point, which might give me a good risk to reward ratio. A good risk to reward ratio. Remember, we are on a downtrend and I'm looking to sell. And the reason why my take profit will be at this point is because I still have it in mind that the market can do what? That the market can give us what? That the market can do something like this. Sell down, buy back up, retrace around here, and keep going up. This is the position where I'll be buying the market if the market decides to give this. This is the position where I'll be buying the market. I won't be buying the market around here because that's a lower price. It's just about you understanding that the market can sell and it can buy at every given position. Yes, yes. Even at this position where we look at this market currently, it can still buy up to the upside and keep going up, right? It can still give us a bullish engulfing and it makes complete sense. It will be a lower, higher, high, higher, low, higher, higher. It still makes complete sense. What you should always listen is it good for me to buy at this point? Yes. Is it good for me to sell at this point? Yes. And I'll be riding this market to the downside until it gets right down. So back on the 4 hour time frame, let me show you guys how to be pyramiding on this trade. If the market decides to either sell down, look, the best traders, they don't trade every single day. They wait for their setup and before they trade. So if the market decides to get here, then I'll be waiting for it back around here, maybe playing around here. I'll be waiting for a break of structure or the power of 3, that is distribution to the downside. I'll be waiting for the market to distribute again to the downside. And once I take a trade around here, I'll be stacking multiple position, maybe candlestick pattern, maybe bearish candlestick pattern, maybe break of a major key zone. Maybe by then a monthly key zone would have been created. Maybe by the sweep of this key zone to the downside, I'm stacking another position based on what I'm seeing, and that's just it, right? Remember, I stated the reason why I'm trading this setup is because it falls within when to trade, which the market will be least manipulated. You have your clean setup of the month. That's maybe you had one setup for this month, early of this month. This was a setup for a buy, and now you're having another sell setup. It's good. You have 2 setups for a month, 2 high quality setup, and it's because you're being patient with this currency pair. I don't trade only UJ, only AU. Maybe you had a setup, 3 to 4 setups for a month, 2 on AU, 1 on UJ, 2 on UJ, 1 on AU. It's good for you as a trader. You don't need to take 10 trades for a month. The only thing is that you identify that this trade, I'm taking it with this account because it's my reasonable risk to reward ratio account that I'm willing to make 1%, 3%, 4%, 5% a month. And this one is a flipping account, which I need to keep stacking in and pyramid on positions. You have to know how you're approaching the market. It's very important. I've analyzed the market using so many confirmations here, key zones, candlestick patterns, the trend. I've talked about the power of 3, which is these parts I made mention on the daily time frame. I've talked about market structure, and it boils down on the aspect of, I talked about retail liquidity as well, which is around here, which boils down to the fact that Forex trading is combined intelligence. If I was just looking at this market with the basis of candlestick patterns, I want to have actually, I know for actually get that much confidence for take this trade in it. I want to have that much confidence to take this trade. You have to bear with me. You have to bear with me that when you're approaching the market, you look at all these confluences. Right now, on the weekly time frame, the reason why I'm looking that the market can buy up is because I'm hoping that the market pushes to the upside and take out some amount of retail liquidity from these candlestick, but notwithstanding, the next candlestick can just push to the downside and keep selling. You get the point. So it all depends as to how you approach the market. We might have another bearish candle that just sells to the downside and closes here, and the market keeps dumping. Right? It keeps dumping. Anybody with a question so far?